All right, so the 2022 tax brackets are now out. So let's take a gander, shall we? Because this is always interesting because the tax brackets are adjusted for inflation, and we had a big inflation last year, 2021. So they should go up quite a bit. All right, so on a yearly basis, the IRS adjusts more than 60 tax provisions for inflation to prevent what's called bracket creep. Bracket creep occurs when people are pushed into higher income tax brackets or have reduced value from credits due to inflation instead of any increase in real income. You know what I'm saying? That would be the old alternative minimum tax, bracket creep. The old, no, not the old, but the current taxes on Social Security is the epitome of bracket creep. Yeah, it's crazy that hasn't been adjusted. And that's nuts. It freaking ticks me off. I just think it's funny because they're saying we're going to make it so poor people don't have to pay tax on Social Security. We're going to give poor people a bump up. Why don't you just get rid of the taxes on Social Security for poor people, man? Friggin' idiots. It's crazy. I would say you don't pay any tax on Social Security. If you're married, if you have income less than, I don't know, $100,000, you don't pay any taxes on Social Security. If you're single, $50,000. That'd be even, Steven, and that'd be fair. But they don't do that because they like the money. We know they need the money. All right. So here comes the 2022 federal income tax brackets and rates. All right. So here we go. So married filing jointly. Again, this is let's get it. Taxable income. Let's just pull the PDF down. Let's just download this guy. Oops, hold on just a second. That's a spreadsheet. I don't think I have PDF on this. Hold on a sec. Let's see what we get. All right, so here we go. We got a nice little table here from Tax Foundation. For married filing jointly, this is your taxable income. Let's see here. So we got the 22%. See, we need what the standard deductions are. Let's hold on just so we go standard deduction. The standard deduction, if you're married filing jointly under the age of 65, it's now $25,900. That's good. If you're single, it's $12,950. So basically $26,000 if you're under the age of 65, $13,000 if you're under the age of 65 if you're single. And I think they if memory serves, let's see what we can find for those over 65. Still just the additional $1,300. All right, gotcha. So married over 65 age, additional $1,300. And if you're single, it's $1,650. So if you're married filing jointly over the age of 65, your standard deduction is $25,900 plus, was it $1,300 plus $1,300? $27,200. I don't think that's $1,300 per person. I might be wrong. You can put in the notes if I'm mistaken there. Maybe it is. I don't think so, right? I think it's $1,300. I'm almost positive. But anyway, be that as it may. Basically $26,000 for married filing jointly under the age of 65. $27,000 for married filing jointly over the age of 65. If you're single, it's $13,000 as a standard deduction under the age of 65. If you're over the age of 65, it's basically $14,500, give or take. All right, that's good to know. All right, so the tax bracket now, if you're married filing jointly, to be at the top of the 12%, you take $83,550 plus our standard deduction, which what did we say was $26,000 plus $26,000. So you about 110. 110 puts you in the 22% tax bracket. 109 keeps you in the 12. 110 puts you in the 22. I don't think you should get wrapped around the axle on that. I don't think it matters all that much. You know, if you're right on that cusp, it's okay to go over it a little bit. That's interesting. So basically, if you're trying to stick below the 12% tax, below the 22% tax bracket, if you're married, you want to keep your gross income at 110. If you're single, you want to keep your gross income at roughly half that. Was at $55,000. So just keep that in the back of your mind. So that's good. If you're also in the Roth conversion, you're like, I don't want to go into the next highest tax bracket. Well, you got to know those numbers. So if you're in the 24%, you want to keep your income below 178 plus 20, about 204. So keep your income below 204 and you'll stay in the 22%. The minute you go above 204, you're going to go into the 24%. I don't think it's that big of a deal, but 37% right here at 647. So, I mean, that's just talked to a guy this morning. He's going to convert everything into his Roth, about $1 million. So he will be single He's going to pay 37% on the amount above $539,000, which is about $500,000. He'll have to pay 37% on, which he's like, yeah, I want to do it, get done with it. All right, well there you go. So the standard deduction increases by $400 for single filers, $800 for joint filers. There is no personal exemption. If you're wondering about Right Capital, why it says QBI with a zero, and in the future it says QBI with some amount of money, is because there's a personal exemption come 2026 that comes back in Right Capital. It just is using the same line for QBI as a personal exemption, just FYI. Anything else jump out at me? AMT stuff. This is where Trump really helped us middle class people by getting rid of the AMT for most middle class people, so that's fantastic. So right now to have AMT, you got to have married filing jointly over $1 million. All right, so that's good. He definitely hit us good for that for sure, because the AMT is a freaking clown show. EITC, earned income tax credit. If you got 3 or more children, your maximum credit is $6,900. The phase out begins at $20,000 of I don't know if this is gross or net income or taxable income or AGI. I don't know, but I think it's going to be, I just don't know actually. Phase out ends at $53,000. So if you got 3 kids and you're making more than $53,000, you lose your EITC tax phase outs. That's for single. Oh, there you go. Well, if you're married, it's about the same thing. They don't give you much more if you. That sucks, man. Maximum child credit is $2,000 per child. It's not adjusted for inflation. Thanks, Joe. The refundable portion of the child credit is adjusted for inflation. It will increase to $1,500. That's good. Let's take a look at capital gains. Same thing. It's just the exact same thing. The 12% tax bracket is going to be the same for capital gains and qualified dividends, as long as in terms of whether or not you have to pay taxes on it. All right, so that's good stuff. They got QBI here. I'm not going to go into that. Annual exclusion has gone up now to $16,000. So you can give $16,000 completely tax-free to any individual, which is up from $15,000 before. But remember, basically you can give, I can't remember, like what, $5 million as your total lifetime exclusion. So I don't think people should get too wrapped around the axle on that either. If you give your old buddy Josh $50,000, it's still most likely going to be tax-free to you. You just got to file a IRS tax form 709. All right, so there you go. So it definitely has gone up. It didn't go up as much as I would have thought. $800, given the inflation we had. We'll take it, but that's not that big of a deal. I mean, it's still basically 110 for married filing jointly. 110 is where your threshold cuts off for the 12% tax bracket of AGI. And if you're single, it's 55. So just keep that in the back of your mind. All right, love your thoughts. Thanks now.